Hey all, welcome to ShareTreck. This is Raj here. Welcome, good morning. It's a nice morning out here and things are not quite as they seem. Let's look at the CNBC website, which is where we generally begin our days. And you can see that all the indices are looking red, but I wouldn't be surprised that when the market opens, these turn into green and then they bounce back down again because there are some key resistances which are in place from a technical perspective. We'll talk about that when we get into our TradingView platform and when we start looking at the indicators. But we also have some fundamental reasons why I think we may drop back down. That is because you have this message from Fed Powell, right, coming up in another couple of days, and I'm thinking that he's going to be very circumspect because I don't think Powell has any clarity on what Trump is planning to do. So he's holding his powder dry, and soon there is going to be some kind of confrontation between the executive branch members like Fed and the White House regarding interest rates. So we'll have to watch out for that. But if you look at the other items out here, you could see that there is a bit of concern about recession. And those concerns are, I think, justified because every time the yield curve has inverted and gone back, we have had a recession. Now we have done the same formation here again. So recession, I don't think is further away. And it could also be hastened when we have the reciprocal tariff starting on 2nd of April. So reciprocal tariff means that US will impose the same tariff any country imposes on it, which could mean that in some cases, US might reduce the tariff because the country that is exporting has got lower tariffs. So all those kind of adjustments might take place, but we are talking about 100% of exports and imports of US coming under some kind of mandatory tariff, which I think is definitely inflationary. And if you look at the weak employment numbers are very tepid. So we could get into a situation which could either be recession or stagflation, because in recession everything is going down. In case of stagflation, the prices may remain high, but employment might go down, and that's a very bad place to be in. And I don't know, it's an unenviable job for the Fed, because what will the Fed do? Do they focus on boosting the employment or holding the inflation line? So that's the kind of problem that they are likely to be. And typically, most responsible governments have monetary policy and fiscal policy kind of coordinating with each other, even though not explicitly, but they watch each other and try to make life easy for each other rather than difficult for each other. So right now in the US, I don't think we have that kind of a mix. Policy decisions which have monetary impact are being made, and those decisions are not crystal clear. They could change from day to day, week to week, and that's the reason why I think Chairman Powell is going to have a very tough time when he speaks, and the market is going to have a very tough time deciphering what exactly is happening. And this is my personal feeling. And as I said, that we're going to have the Fed interest rate decision coming up tomorrow at 2 p.m. So tomorrow is very critical. Building permit starts, housing starts, I don't think they're as important, but housing sector is very important for the US economy, and the interest rate is going to determine how the housing sector goes, renewal of mortgages, sale of properties, and so on and so forth. So unless we have lower interest rates, I think the housing sector is going to stagnate, and which means that HELOCs or home equity line of credits will not be used for big ticket purchases or vacations and things like that. So it can put an overhang on the economy. Let's leave it at that, and then let's go and have a look at what's happening out here. Let's go on to futures. That's where we start. If you look at NASDAQ futures, it's up 0.54%, and you can see that one of the biggest breakthrough we have had is that we have broken through this huge area of resistance. I'm going to color this green because now this is an area of support. Okay, then we have this resistance out here at 20,038.50. We have not been able to pierce that. We have just been pushed back from there. So today the biggest test for us is, are we going to be able to break that? If we are not able to break that, then I think we are definitely coming down. And on the way down, we have got a lot of support in this area as well as this diagonal line of support. So for this market to really tank, it will take a lot of efforts. And for this market to really go up, it's also going to take a lot of efforts and a lot of improvement in the monetary as well as fiscal policy areas. Clarity is the main thing that the market is looking for, and it's not getting that. Now let us say if we were able to break this resistance out here at 20,038.50, then we have a very strong resistance out here, which is a confluence of two exponential moving averages, and that's going to be difficult to break. So let us take it one day at a time and let us react rather than predicting. Right now everything is on a razor's edge. It could go either way. If you look for clues on the MACD and the momentum, you can say that the MACD is improving, but the momentum is far below the average, so I wouldn't think of this as a very reliable indicator. Next, let us look at S&P 500. Again, S&P 500 has been pushed down from a really good indicator out here, that is the 200-day exponential moving average. And we also have a horizontal line of resistance, which is 5,738. So both of them are pushing it down. Pre-market, we are up 0.52%, but still we are way below this resistance. So if we were able to break through this resistance, then I would say that something good can come out of it. In the meantime, I'm going to mark some supports out here, previous resistances that have been converted into supports. So they are going to try to soften our blow as we go back down. And there is a huge area of resistance out here, which starts somewhere around 5,477.75. So right now I have shorts on Tesla and Apple, and I've got longs on Amazon. I'm maintaining the configuration for the time being. You will see how it goes. And friends, I want to thank you guys, because I thought JD.com was a dead investment, but it's coming up. And the way I see it happening is that China is putting a lot of stimulus into place, and I'm thinking that the market is going to move towards China, and it's an advantage for China if they put more stimulus there, because the currency can weaken. Because what US wants most is for the US dollar to weaken. So US dollar is trying to weaken, and if China doesn't do the stimulus, Chinese currency might strengthen. So this is the best opportunity for China to stimulate its economy. So I'm thinking JD.com is going to be a good bet. So I'm holding on to it. It's profitable now. So thanks for the tips. And having said that, let's look at the dollar index. You can see that the dollar is bouncing off this huge area of support. Unless it breaks down from this area of support, I think we are in status quo. And right now, this is a doji candle, indecision out there, and we'll have to see how this turns out. If it turns out to end up being a bullish harami out here, then we can probably visualize double bottom, and then it will take, I think, US dollar all the way up to 405 or something, and then we are looking at the 9-day exponential being a resistance. We already have a death cross out here, which is a bearish pattern. So we'll have to wait and watch what happens out here. MACD momentum, everything is looking weak. So I think all the more it emboldens China to do stimulus. So that's the way I'm looking at it out here, my friends. Good morning, Inf. And let's go on and have a look at the 10-year yields. As I was mentioning yesterday, if we were to break through this diagonal line of resistance, then I think we will be on this bull channel. So I'm happy to say that we have broken out of this diagonal line of resistance. So I'm going to mark that green. And yes, if I'm going to respond to you before the end of the live stream, I'm going to wish you the very best for your travels. Then let's look at this 10-year yields. So as the yield goes up, the money will get out of the stock market, and probably it will get into the bonds. And that's also another factor which makes me think that the bonds that we are seeing may not live for long, and it will probably come back down. And we have the support of the 200-day exponential right now for the 10-year yields. So I'm thinking that the 10-year yields with the bullish MACD and moving closer towards the average momentum is kind of indicating that it's going to strengthen up, and US, if it wants to borrow, will have to pay more to refinance its debt. And that's not the place where US wants to go. So let us look at this very carefully. This could have a bearing on the overall market, and that could herald the potential of either a recession or stagflation. That's the way I'm looking at it. And then let's go on and have a look at the indicators. So S&P 500, it has broken above this line of resistance that we had here at 5,659, and that has become a support. So this is the good news. MACD is improving, that's also good news. Momentum is picking up, that's a good news. But the fact that we are below average momentum is not a great news. And we have been pushed down by the 200-day exponential moving average. We have this wick here which says we have been pushed down. And this is the candle for 17th of March. And today, I think that's going to be the main resistance for us, this 200-day exponential moving average. And if we break down below that, then our support is going to be at 5,659.34, and if we break down from there, then we are coming all the way down here. So that's what is in store for today. And if we break above the 200-day exponential, then we are looking at a very strong resistance from 5,779.03, and at that time I think we have the 9-day exponential also, which is sitting at 5,789.92, become another resistance. Maybe there are combined resistance out there. There will be an area or a pocket where we are going to have that resistance. Now I would like to pull this diagonal line of resistance further from here. This is going to be marked red. So this is another resistance that will come into play. So that's the overall lay of the land for S&P 500. Then let's look at NASDAQ. NASDAQ has got this diagonal line of resistance for sure, and it's also got the 200-day exponential moving average, which is going to act as a resistance. MACD is improving, which is a good sign. Momentum is also picking up, that's a good sign, but we are still below average in the momentum and the RSI, so that's the weakness that I see out there. Next, let us look at VIX. VIX is up 1.17%, and it's picking up slowly, but overall, I think if you look at the structure of the VIX, it seems to have subsided. It's above 20, so we don't have swing trade opportunities out there, but a little bit of volatility is good for day traders, so there will be a lot of opportunities today for day traders. Dow Jones, it's up 0.85 as of the previous trading session, pushed down nicely by the 200-day exponential. The key for Dow Jones will be to break the 200-day exponential. MACD is also improving, momentum is improving, but there is not enough juice in the tank. Russell index is down 0.67 in pre-market trades, and it's got very strong resistance out here, somewhere around 209, 210 range, because the 9-day exponential and the horizontal resistance are coinciding out there. So we need to break through that level in order to do something good. Then put call ratio is becoming mildly bearish, and that's a good sign. And if you look at the chart for gold, gold is seeming to improve, and gold has crossed 3,000. It's staying above 25, and that's looking really good, which again is an indicator that money is moving out of stock market and other areas and getting into gold. Now if we look at XLP, where is XLP out here? We have XLP, and in XLP you can see the formation of a reverse head and shoulder. And if this gets formed properly, that would mean that consumer staples is to zoom up. And when does consumer staples zoom up? When we are coming closer to recession, you see consumer staples coming up. So there are a little bit of clues here and there. You can't take it to the bank yet. You have to wait and watch. So I'm thinking based on all of these things, any bounce that we see is to be taken with a grain of salt. The best thing is to stay on the sidelines and watch what happens, and then move in. You may have a little less profits than you could have made, but you would be a little safer out there. That's the way I'm going to play it. I'm not changing any of my holdings. The loss-making units are going to stay in the loss-making. The shorts are going to remain, and the longs are going to remain where they are. The longs are with Amazon, and the shorts are with Apple and Tesla. That's where I have left it. Now, let us look at the comment section. Yes, Inf, all the best for your journey. Prepare very well. Take all your travel documents, keep them safe. And we hope to see you from wherever you are when we have our live stream. And Hot Dog is saying Amazon and Tesla look bad. Yes, Amazon and Tesla look bad. Yeah, we'll check them out. I have got Amazon long, so I have to decide on that. It's positive right now, but I'll have to check out on that. And Tesla is bad. Yeah, I agree. I have got Tesla shorts there. I'm keeping them. Let's go and have a look at AI. So let's look at AI. I'm going to start with NVIDIA because I think NVIDIA is the engine which can move the market. And if you look at NVIDIA, I had put 2 points for shorts. I didn't buy any shorts out here, but this is the place where I'll definitely go for shorts. And we have got the GTC coming up for Amazon. That could also be a catalyst, but the action so far doesn't seem to indicate that as any big catalyst, or else we would have seen a lot of movement upwards. And we have had trouble breaking through this combined resistance of the 9-day and the 200-day exponential moving average in the $121 range. So we are down again. This is the candle for 17th of March, and our current price in pre-market is sitting at 119.30, and we have the support somewhere around 115. So I'm thinking that 115 and 121 or 122 is going to be the range in which NVIDIA is going to move. But all of a sudden, if you see a jump out there, then that could be a potential GTC effect or something that we are going to expect to hear at GTC that might improve the prospects. But even if GTC comes in, I'm thinking that the most that we are going to go up is somewhere around 130, after which we are going to come down. And when we come down, we're going to bring the entire market down with us. That's the way it seems to me right now. And you guys can also give me your feedback on the comment section, what you think about NVIDIA. There's plenty of room for NVIDIA to go up, and there's plenty of resistances which can push it down if it goes above the 200-day exponential. Next, let us look at Meta. Meta is well within this bearish channel that we had drawn for it. Pre-market, it's down 0.50, it's at 601. And for today, I think our range is 606.00 to stay within this channel, within this bear channel. So I'm thinking that probably Meta will do the same. It might go down. We never know with the market the way it is right now. Well, once the market opens, maybe within an hour, it may start going up. But I think the way is definitely down. The other fundamental reason is also that we have this Russia-Ukraine thing to be sorted out. So I'm expecting a lot of drama, WWE style drama out there. And that can have an impact on oil prices. And also the Houthi rebels are being shelled by Donald Trump. And that's going to definitely draw some response from Iran. He's baiting Iran, and all those things can push oil up. So I think that there'll be some kind of geopolitical issue which can disturb this apple cart. So we have to keep that in mind. I think after FOMC tomorrow, I just want to know if Powell thinks 2 rate cuts this year or not. I'm thinking that rate cuts are definitely going to be in the card if recession is what he thinks is going to happen. And if he thinks it's going to be stagflation, then I'm not so sure that he's going to be very open about rate cuts. He would like psychological pressure to push down the yields. The yields are going up, so the bond market is thinking that inflation is a concern. So I don't know. Again, Fed chief is in a very difficult position. This is an unpredictable administration with very radical views. You remember what happened to Turkey when Erdogan wanted to go for that Islamic 0% interest rate concept, and they had super inflation, and somewhere down the line they threw the towel, and then they went back to classic economics. So I don't know how much it is going to take for this government to get back to classic economics. To answer your question, Hot Dog, I don't think it was a question. You were making a statement, but I'm giving my feedback on that. And yeah, so that said, let's go and have a look at Google. Google, again, Yeah, I think it's a very undervalued stock at this point of time. It's at a bargain price and it's going down further. I'm going to load up a little bit more on Google, but this time I'm going to search for leveraged ETFs, which are double leveraged or something for longs. And I'm going to buy them because I'm feeling my spidey sense say that this is going to be a very good opportunity for Google. Because I'm thinking even if recession comes, one of the things that is going to be helping in recession to come out of it is going to be AI, and Google is well positioned in the AI area, and they will definitely be one of the companies that make it good, and they are pretty strong with their IP. So I'm bullish on Google. It's the lowest valued of all the Mag 7 stocks, and at sub 20 PE, I think it's a no-brainer. So let us look at the short position out here. I was thinking that if it came somewhere close to the 200-day and the 9-day exponential, I would do a short out there. If you look at Meta also, I had put a short in this diagonal line of resistance. So that's one area which I'm still contemplating. But right now I'm a bit afraid to get into shorts because I want to see what happens with the FOMC, because that can still move the markets. Then we have Amazon. So Hot Dog was saying Amazon is looking bad. Amazon and Tesla is looking bad. So let us see what's happening out here. MACD is improving. That's a positive. Momentum is below average. Pre-market, we are down 1.37%. We are below the 200-day exponential and the 20-day exponential. All of them is really bad. And I had some amount of hope yesterday when this came out, and I was thinking my Amazon longs is going to finally pay off. But right now I have a little bit of doubt because we are falling below this diagonal line of support that we had. And this now becomes a diagonal line of resistance. So we are within this bear channel back again. However, at this point of time, I would like to see what happens where we end the day. If we end the day within this channel, I'm going to throw in the towel and I'm going to sell off my Amazon longs, because apart from Google, another high conviction for me was Amazon. But I think the technicals are showing that Amazon is not that strong as I thought. It's getting weaker. Maybe there will be attractive PE at which we can buy. So that said, you are right, Hot Dog. Amazon is looking very weak. Let's come to Apple. Apple has managed to stay above this diagonal line of support. And today, pre-market, it's down 0.12%, but it's still above this diagonal line of support. I want to see what Apple does. I am short on Apple, and I'm thinking that Apple has got to go down further. I'm basing it on this reverse head and shoulder pattern, and I'm thinking that it can go all the way down to 188.39. Another reason why I think this could happen is because geopolitical issues, China-US conflicts, those things are going to mean that there's going to be a headwind for Apple in the biggest market that we have. And that makes me feel that we can expect further weakness in Apple. I'm thinking that because of this rapid drop, just like NASDAQ did, that's a little bit of sideways and upward movement, but it's going to give way and we're going to come down. MACD, momentum, both are looking weak. So I'm going to hold on and see what happens today. If we come down below this diagonal line of support, I'd be happy to hold my shorts. Next, we have Microsoft. Microsoft is down 0.44% in pre-market trades. It broke out of this diagonal line of resistance. So I'm going to mark this diagonal line of resistance as a support. Now this support can indicate that maybe we are going to create new higher highs and higher lows and create a new bull channel and have this support out here, which was earlier a resistance, 386.90. So I'm going to convert that into a support, use this as a base and start going up. If that happens, then I think we are going to be able to move up further. And Microsoft can start moving. I'm thinking that there is a new positive development in the market. We are seeing individual stock ETFs. I'm seeing long ETFs for NVIDIA. I am seeing long ETFs for Facebook or Meta. So those kind of long ETFs enable you to differentiate between the Mag 7 stocks and just pick those individual stocks that you want to go bullish or bearish. So I've seen 1x leveraged and 2x leveraged ETFs for Apple, 3x leverage ETF for Apple, and those Mag 5 stocks. So I'm thinking that people are likely to get in there and move away from the XXX, FNGU and FNGD, those kind of composite ETFs. I think that will enable playing these kind of dynamics much better, because now has come the time to differentiate between the Mag 5 stocks. Some of them will be winners and some of them may not be. So that said, Hot Dog is saying this won't be called the Mag 7 for much longer. Yeah, you're right. I think that's what I was trying to articulate as well. We're going to see a breakup in there, and some of them are going to be really strong. Google and Microsoft definitely are going to be the strongest among the Mag 7s at this point of time. And I would put Amazon after that. And Nvidia, Meta has been very strong all the while, but it seems to be going through a weak patch right now. Tesla definitely is out. Tesla shorting is a very good thing. I'm still on TSLS and it's positive. It's down 3.06% this morning. And there's a lot of headwinds for Elon Musk out here. And the Tesla board, I don't know what they are doing. And the chairperson is going to be under a lot of pressure. She has made a lot of money out there. She has got to take care of the shareholders' interests. Tesla is bleeding goodwill left, right, and center. And this is not a good look. And even if they let go of Elon Musk, I don't see how Tesla is going to come up, because the momentum on Tesla will drop. And I'm thinking that it's going really bad. Yeah, Hot Dog says, I agree. After a downtown, Google will be the one I reinvest in. Absolutely. It's going to be a multi-bagger. It will make a lot of money for everybody. And they're going into physical robotics as well, because Google is a very low-profile company. Sundar Pichai is, Pichai is very, very low-profile kind of a guy. They silently do things. Waymo has been operating for a very long time in multiple cities, and they are expanding. No fanfare, nothing, just heads down and working away. No kind of flashes of any kind. Whereas with Elon Musk, I mean, he has got so much hype before even he plans something that, the market goes crazy, the fanboys go crazy. I think Waymo has delivered a lot more. I have argued that in my Google versus Tesla video. I put all my points in there. I'm very much onto Google. Okay, let's come back to Tesla. I think Tesla is going to go down further. Let's look at shorting Tesla. That's my personal opinion, not financial advice. And I put my money into it as well. Oracle is down 0.45%. It still remains within this diagonal line of resistance and within this bear channel. So this becomes a very good opportunity to short out here and then wait for it to come down and then move up again. So this is the way I think the market might go. That's again another idea from me, but use your own due diligence. These are all my personal opinions, not financial advice. AMD is exceptionally strong out here. Pre-market, it's down just 0.32%. And I'm thinking that AMD is going to come down again because its PE is very strong. And given the strong PE that it has got to come down. If you compare the PE for AMD with NVIDIA is dirt cheap. Just check out the PE. Let me have a quick look at the price to earnings ratio for NVIDIA and price to earnings ratio for AMD. Okay, so first let me quickly scroll down. I'm looking at my phone out here, and let me go down to NVIDIA. So NVIDIA right now has a price to earnings ratio of 40.66. And if I was to scroll down and go to have a look at AMD, let's search AMD. And when I look at AMD, the PE is 104.59. I don't know why AMD is justified to have a PE of 104.59 if NVIDIA is allowed only 40. So it beats me. So from a technical perspective, I think AMD looks very strong, but my gut feel is to short it. And I'm going to draw another line to technically justify shorting AMD. So if I draw a line out here and mark that as resistance, then I'm going to pull this out here and I'm going to put here, and I would say that this is where I would short AMD because it's already above the 9-day exponential and it's converted this resistance also into a support. Fundamentally, I don't see any reason why AMD should do this. Guys, do you have any idea why AMD is doing this? It absolutely doesn't have any reason to do that. It beats me. So I'm going to stay away from AMD and watch it. And if it bounces down from here, I'm going to short it. That's my plan. Intel, again, is coming up. All the subcontracting and the contract manufacturing, all those things, the new CEO, everything is causing a hype. I think it's all going to subside later on. We might probably see some kind of inverted megaphone structure out here, which is converging into one place, or like a pennant. So I don't know much about Intel. I don't know why it's moving so much. SMCI is down 1.36%. I'm not worried too much. It still has got this bullish channel on which it is riding. It has got a resistance out at 42.80. That is what it's going to have to break through this morning. It's at 41.39 right now. It's got the 200-day exponential holding it back at 45.23. So that's about it. And then you look at Qualcomm, it's down 0.09%. It's neither here nor there. Nothing major to talk about in Qualcomm. I don't know what's going to move it where. It's kind of a consolidation pattern out there. Broadcom is down 2.21%. I think recently one of the big tech companies made a move away from Broadcom with some less known silicon company. That could definitely have an impact on Broadcom. I forgot the news article. If any of you remember that, just put it in the comment section for the benefit of others. But I think that's something that could weigh down on Broadcom. And it's back again below this diagonal line of resistance that we had drawn earlier. I'm just going to adjust this a little bit and that's it. I'm going to leave it there. So that's going to be the resistance for today. Palantir is down 1.34% and we still have support at 83.68. Momentum is improving. It's become almost average and MACD is improving as well, moving towards the signal line. But I again think PLTR is very overvalued from a price to earnings perspective and it has to come down. NVIDIA longs, I'm not going to talk about that. I'm going to move on to TSLS. I'm just going to show you how Tesla shorts are moving up again and they're just held by the 200-day exponential. If they break above that, then I think Tesla longs, Tesla shorts are going to yield a lot of profits. I'm invested in this one. And then let me go on to FNGB, which is down 2.23% in pre-market trade. And this is where I'm going to reflect on what Hot Dog said out here, that the Mag 7s are not something that people are going to look at. I think the breakup is what people are going to look at. And I think FNGD, which is what I have invested a lot on, is going to turn positive very soon. Pre-market it's up 1.31%. I think it's going to turn positive, and then I'm going to take my profits out of FNGD and I'm going to go into individual stocks and go long or short on those. So my FNGD play will come to an end as soon as I get some profits out there. I'm very close to profitability out there. I'm going to book the profits when the chance comes in. Next, let us look at what else do we have out here. I want to look at Rigetti. Rigetti is down 8.96%. This one is keeping on giving me blood pressure, high and low blood pressure. It has got support at 9.86, which was earlier a resistance. So I'm going to mark that as a support. If we stay above that, I'll be happy. I'm considering it overall bullish because it's above the 200-day exponential and the 9-day exponential. And if I was to try and draw a line of support out here, joining multiple lows, we seem to have a slightly higher low, so it's a mild bullish channel. So I'm going to be optimistic about Rigetti. SMR has also picked up a lot, and pre-market it's down 2.33%, but as long as it's about 200-day exponential, I'm happy. The next milestone I'm looking for it is to break above this 9-day exponential, then we'll be in business. Then I want to look at JD.com. I'm going to stay with JD.com because I'm looking at my target of $51. That's back into play as far as I'm concerned. So I'm not selling it anytime soon. And then I go to genomics. In genomics, I think we have Verve going down 0.16% in pre-market trade, but this diagonal line of support is still in place. And we have both the 200-day and the 9-day exponential moving average above us. So we are in a bear channel as such. And we look at Ginkgo Bioworks, it's flat in pre-market trades. It's got this minor line of resistance which is holding it back. It has to break through above that. Caribou is also flat in pre-market trades in a bear channel. CRISPR Therapeutics is down 0.09%. This minor line of support is still holding it up. And even if we look at this as a flag, it's a bear flag, and it's likely to break down on the lower side. MACD momentum are not looking great. Momentum is picking up, but it's still below average. MACD is improving, but it's still bearish. Grail is up 1.0%, still within this diagonal line of resistance and the bear channel out here. Prime is up 0.57%, still very weak on the charts. Beam is also looking weak on the charts. And Altimmune is again another one that gives me heartbreak. It's down 1.68%. MACD is turning bullish. Momentum is trying to improve. And we have a resistance out here at 6.22. And for that, we got to take the support of the 9-day exponential and leapfrog above there. Can Altimmune do? I'm not so sure yet. Bluebird Bio is somewhere in the $4 to 3.9 range, and it's still got good support out here at 3.76. Allogene is down in pre-market trades, starting to look weak. It still has got support at 1.79. mRNA is down 0.49%. It's got the double bottom target, which I'm still tracking for 43.74, but this morning doesn't look that great. But MACD is bullish, momentum is at average, so I'd still give it a shot to aim for that. ARCG is down 0.94%. It still has got a support out here at 22.94, which I'm going to mark green. I'm going to make the pixel length a little bit thinner so that you can have a much crisper line out here. Then PSCB is down 0.81%. It's not doing that great. It still has got support at 1.21. Intelia is flat in pre-market trades. It's in a bear channel, and it's got this reverse head and shoulder target that I have for it, but the support at 8.97 seems to be holding it up. But this morning we are at 9.58, and we'll have to see where it goes. Is it going to improve the position and invalidate this reverse head and shoulder pattern? It's quite possible. Then let's look at Illumina, which is up 0.01%. It still has got a huge pocket of resistance out here, and the China overhang, it's not going anywhere soon, and these are the two ranges within which it's going to operate, in my opinion. IMTX is up 1.41% in pre-market trades, and it has a resistance at 5.34, and it's got the support of the 9-day exponential, which is a big positive. Momentum is above average. MACD is also bullish, so IMTX is up to something, and we have earnings coming up on the 19th. I don't know if it's pre-market or post-market, but the earnings buzz is what is making it go up. And if that kind of thing happens, I would suspect that you could have a potential for buy the rumor, sell the news kind of a thing. And after the earnings, if the earnings are not good, it may start drowning back below this line of resistance, which we have at 5.34. Next, we have Editas, which is flat in pre-market trades, but it's on the way back down. And we have got Iowa, which is up 0.53%, a huge gap down, which is acting as a magnet, but a resistance in the 9-day exponential sitting at 4.39. And momentum, MACD, everything is bearish. So a dead cat bounce has been in play for the last few days. That's what I think has happened out here. And I don't want to be too pessimistic, but I'm going to draw a line of resistance out here. And I'm going to say that this is the line of resistance that we have to break through in order to make any move upwards. Unicure, no trades in pre-market, well within this bear channel that we have here. And for those who might want to short it, this could be a point for shorting if it starts moving downwards. And the point where it could bounce is the 9-day exponential for 13.10. So if you wait today and if you see it break below 14.63, you could short it and try to be vigilant somewhere around 13.10 so that you can take your money out. And if it goes down below that, then it's going to go all the way down to this support out here. Again, personal opinion, not financial advice. Then we look at Vertex, which is on a bull channel. I'm not too much worried about Vertex. It's overbought as well. So it's going to moderate sideways. It's doing very well. And having said that, I want to go into currencies. And currencies, I'm going to go for Bitcoin USD combo. Bitcoin USD combo is, I think Bitcoin is going to mirror what happens to S&P 500. If S&P 500 falls, Bitcoin is going to fall. And I'm thinking that it can go all the way down to 73,000. And that's when I'll buy a little more of IBIT. And it's falling. I have some IBIT which is negative. I'm still holding on to it. And the reason why I think it's going to fall is because it's been financialized. It's moving lockstep with the S&P 500. And I think in the future it could decouple. It has a potential to do that if China becomes a major play, and if there is a peace talk within Russia and Ukraine and that works out and Russia gets sanctions lifted. I think a good deal of money that Russia had under USD is all going to move into Bitcoin, and that could give a bit of a boost to Bitcoin. And then Bitcoin can start decoupling, because many regimes which have been under sanction will start pushing their money out into Bitcoins. And I think that could differentiate and give Bitcoin a store of value kind of a thing, which doesn't come under the sanctions regime. So that's what I'm thinking would be in play for Bitcoin. But that's a long way away. We have to see all those developments happen. By then, we would definitely touch 73 and then move back up. So that's my thought out there. And then what do we have here apart from this? Okay, I'm ready for interaction with our viewer community. Let us see what we have out here in the comment section. Okay, so Intel's new CEO momentum, and it's so low, maybe value being recognized for Google. Yes, I'm thinking so. I'm thinking that we have to buy Google. They also have a DeepMind, which is going to work with physical AI. So that's a new area. Waymo is again a deployment of AI. And they have Gemini going out, which is also being into subscription. Yeah, so they're pretty good. I think they're pretty good. So that said, I think I would like to wind up today's session, have my breakfast, and then get ready for the trading session today. Friends, thanks for tuning in. It makes a lot of difference. We are a retail channel, and as retail investors, when we exchange information, it's really helpful. I'm really happy, Inf and Hot Dog, you both have been able to join me regularly. Thank you very much. We'll catch up again. Bye for now.